I've been trading in the foreign exchange market for about 4 years now, all right? And this is what I do with 80% of my time. I trade and I also teach people how to trade, all right? So we've been doing this back to back, and we've been seeing a lot of people become successful in this industry, right? It takes a lot of consistency, takes a lot of hard work, to get to the level you want to be inside of the foreign exchange market. So that is just a word of advice. If you know you want to go hard in this, make sure you go hard, give yourself a little bit of time, all right? 2 months down the line, 3 months down the line, 4 months down the line, all right, you're not going to be where you started off from. And you're going to be gaining more experience, because one thing about the foreign exchange market is experience, all right? Experience beats a lot of stuff. Right? A lot of people feel it's just all about knowledge. It's all about knowledge. No, it's all about experience, all right? The more you trade, the more you attend trainings, the more you practice, the more you gain experience. And that is one of the biggest things ever in the foreign exchange market. All right. So, like I said tonight, we're going to be talking majorly about three things. All right, three things, like I said. Okay, so let me share my screen here so we can get started already. Let me share my screen. Okay. So, guys, like I said, we're going to be talking about three major things tonight. We're going to be talking about analysis, all right? And we're going to be talking about risk management. Then I'm going to be talking about mentorship and further, studies and how to get started with your trading, all right? I believe everybody on this call have actually been able to set up their Forex account. That's if you're a newbie. If you have not, all right, after the class, I'm going to drop my contact and you can send me a message and let's see how we can help you sort whatever issue you're having with it out. All right. So, like I said, the first thing we want to talk about tonight is analysis. All right. Analysis. So, basically, analysis is broken down into two. All right. We have the fundamental analysis. We have the fundamental analysis, and we have the technical analysis. So, as a forex trader, you must understand the two, right? You must understand the place of fundamental analysis and you must understand the place of technical analysis, all right? You must understand these two, okay? So we have to, like I said, basically, we are talking about analysis. We have two types of analysis. We have the fundamental analysis, right? You might want to take notes down. And we have technicals, right? Fundamentals has to do with, economics of a nation. Okay, while technical has to do with your charts majorly. All right. So fundamental has to do with economics of a nation, while technicals has to do with charts. Now, when we are talking about fundamental analysis, all right, when we are talking about fundamental analysis, okay. Guys, I hope everybody can hear me. Someone said my voice is breaking. If you can hear me loud and clear, give me a 111 in the chat box. Please, if you can hear me loud and clear, give me a 111 in the chat box. I believe my voice is not breaking. Guys, if you can hear me, right. So, Emmanuel, you might want to check your network. You might want to check your network. It is not from my hand here. Probably it's your network. Every other person can hear me. All right. So, when we're talking about fundamental analysis has to do with, the economic data coming out of a particular country. So, for instance, let's take Euro USD for instance. The exchange rate of Euro USD is greatly affected, right? It's greatly affected by what is happening in the European Union nations, all right, and in the United States of America. Because why? Those two nations are what comes together to form the Euro USD currency. All right. So whether the Euro USD is going to be going up in value in exchange rate or is going to be coming down in exchange rate is 100% dependent on what is happening in both nations. All right. Now, what are the key things we look out for in fundamentals? When we are talking about fundamentals, we look out for news. We look out for data that are coming out of the nation. What kind of data? We are talking about interest rates. All right. We are talking about unemployment rate of a nation. All right. We are talking about the GDP of a nation. All these economic data that comes together to form what the details of a nation is what we look out for. All right. Now, there are some other stuff that we also look out for, like there are some unscheduled news, like when key people of a country wants to talk. For instance, in the United States of America, all right, if their president, which happens to be Donald Trump right now, if he wants to talk, all right, it's going to affect the United States dollars. Right? So it can affect it positively that it starts shooting up in value, or it can affect it negatively that it starts shooting down in value. All right. Another key person in the nation is the central bank president. Okay, so if the in US it is called Federal Reserve. If the president of the Federal Reserve wants to talk, all right, whatever information is passing out affects the United States dollars on the forex market, guys, on the forex market. So you, as you continue your journey in the foreign exchange market, there are some advanced trainings you will still go to that you can learn more on these fundamentals. All right. All right. A lot of people they base 80% of their trading on fundamentals, while some traders base it on just technicals. All right. But there are some key news. Right. There are some key news that whether you trade just technical, if you trade just technicals, you must keep an eye on it. All right. So there's a website you can always go to. All right. Forexfactory.com. So if you're on the call, make sure you are noting down the website. I'm just going to put it down in the notes here. All right. Forexfactory.com. Okay. So when you go to forexfactory.com, that is where you can see scheduled news. When we say scheduled news, these are news that have time that are coming out. So data that are coming out at a particular point in time. Right. So at that particular point in time, if you're a forex trader, whether you're trading technical, you must keep an eye on it that okay, on USD, there's a particular news that is coming out on USD by 4 p.m. tomorrow. All right. So what do I need to do? I need to keep an eye on USD, and I'm not going to trade the United States dollars pairs for that period. And so as a forex trader, when there's a news surrounding a currency at a particular point in time, you don't want to trade that currency for that moment. All you need to do is leave that currency for that period and you come back to it. All right. So when you open your forex factory, this is what you see. Right now, there are 3 types of folders. Now you can see I have some yellow folders. Look at my cursor. I have some yellow folders under the impact column. For today is Monday. Today is Monday, December 14th. Right now, I can today is November 14th. Now there are 3 kind of folders. So I'm going to click on more here so that I can see for tomorrow and other days. All right. Now basically there are 3 kind of folders. The first kind of folder is yellow folder. All right. We have the yellow folder. Okay. So Forex Factory, we have the yellow folder. Okay. So we have the yellow folder, which means low impact. Then we also have orange folder, which means medium impact. Then we have the red folder, which is high impact. All right. We have the red folder, which is high impact. So let's go back here. Now, this is for today, which is Monday. Now, as a forex trader, if you are keeping an eye on news, you want to keep an eye on news that have red folders. All right, news that have red folder. So those are the currency. As you can see, today is Monday. It's all yellow folders that we have. So today is a free day for us. There are no red folders. So I can trade conveniently. All right. All right. Tuesdays also is yellow folder. All right. You can see I have just yellow folder here on Tuesday, which is tomorrow. Okay, there's an orange folder. Orange folder is medium impact. I can skip that. All right. Then on Wednesday, which is December 16. All right, I have red folders here. So like I told you, red folders are what you want to keep an eye on. So for instance, the euro has red folder, which is 9:15 a.m. So during that 9:15 a.m. on Wednesday, I don't want to trade euro. I don't want to trade euro at that period, all right, because I don't know whether it's going to affect euro positively or negatively. All right. So guys, if this is your first time of logging onto this website, I want you to do something. Where you have the time at the top column here, look, just follow my cursor. Where you have the time that is clickable, 7:45. The time right now, if you click on it, all right, and I want you to change your time zone to GMT+1. Change it to GMT+1 and save the settings, all right. Your DST is off, leave the other thing, just change it to GMT+1, whether Central Africa time or whatever. Just make sure it is at GMT+1, all right. Then you click on save settings. Make sure your DST is off. Once you do that, then your time is going to change back to Nigerian time. All right. So like I said, today is Monday, there are no red folders, so you can check for other days and you are good to go. All right. So that is how to basically check if there are news. Forexfactory.com. I've said the website about 3 times already. Forexfactory.com. Okay. So guys, so I'm going to go back. So that is that about fundamentals. Fundamental is very important, but at the end of the day, you need to keep studying it. Just as a beginner, just make sure you are keeping an eye on the news. All right, make sure you are keeping an eye on the news. I've told you guys how to check the news. I'm going to release all the recordings of the training we've had so that you can go over it. If you don't understand, all right, I'm going to release the recording and you can conveniently sit down and go over it again. All right, so don't worry about it. Don't worry about it. You guys are good, and I'm going to release the recordings and so that you can go over it again. All right. So basically, that is that about fundamentals. Then the second thing we have is the technicals. All right. Technicals has to do with your charts, and that is where I'm going to be spending a little bit of time with you guys. All right. I believe you guys can hear me. Some people are just saying they can't. I believe you guys can hear me. Please, if you can hear me, just give me one in the chat box. If you can hear me, give me a one. All right. Give me a one. If you can hear me, give me a one. Yeah. So people can hear me. If you can't hear me, make sure you check your Zoom settings. All right. Make sure you check your Zoom settings or your network. All right. Or your network. Okay. So guys, let's talk about the technical analysis. All right. Technical analysis has to do with your charts, guys. It has to do with your charts. It has to do with your charts. Now, during the other day training that Fumi and Kofu did for you guys, they talked a little about charts. They talked about candlesticks. All right. They talked about candlesticks. So this red and green you are seeing on my screen are called candlesticks. All right. They are called candlesticks. And what do? They tell us whether price is going up or coming down. All right. They are price representation. They represent what price is doing at a particular point in time. All right. Now we have the red and the green. The red is telling you that price is coming down, while the green is telling you that price is going up. All right. The red is telling you that price is coming down. The green is telling you that price is going up. All right. So basically, when I look at my chart and I see red candles, I will know that, oh, exchange rate is falling. But when I see green candles, I see that exchange rate is going up. Now, market moves in waves. Market does not just go up and shoot up. All right. Market goes up, comes down a little bit, then goes up again. Now, let me show you what I mean by that. All right. Now, from this down part, you can see the upward movement right here. Then it came down a little bit again. All right. Then it went back up again. All right. So that is how market moves. Market moves in waves. Market is going to go up. It's going to come down a little bit. Then that's why you can see there are green candles in between red candles, in between green candles. You know, they are mixed together because if price goes up a little bit, it's going to come down again. Then it's going to go higher than that, come down again. All right. Same way, if price is going down also. All right. Price came down a little bit here. All right. Went back up, came down again. So that is how market moves. That is how price moves, guys. This is the basics of technical analysis I'm giving you. You're gonna be going from this, so make sure you understand this basic. After this class, I'm going to release the recording. We're going to put it on the groups. Go over it again till you understand it. All right, it's what's the weight, it's what's the time. I can tell you that 4 years into this, and a lot of things that we've achieved as a team individually, thanks to the foreign exchange market, practically the largest financial market in the world. So why won't you take your time to learn? Why won't you take your time to learn? All right. So guys, basically that about market movement. I've showed you how the market moves. They move in waves, goes up, comes down a little bit, comes down, goes up a little bit. The red candle represents sell, price is coming down. The green candle represents buy, price is coming up. All right. Now, two things. One thing that you need to understand about these candles. All right. The candle has the body, all right, and it also has the wick. The candle has the body and it also has the wick. Now you need to also understand that the candle, for instance, look at this green candle. Okay. Look at this green candle. Where I'm pointing the arrow to is the body. Okay. That is the body. Okay. While the line underneath it, you can see hello. So sorry about that, guys. So sorry about that. Okay. So sorry about that. So as I was explaining, we also have the wick. All right. The line is what we call the wick. So you can see these candles, they have, okay, you can see that all the candles you are seeing here, some have the body and they have a straight line, maybe on it or below it. All right, those lines are what we call wick, while the body is the body of the thicker part is what we call the body. All right, the thicker part is called the body, the lines are called the wicks. All right, now the body represents where price is actually where price is presently, while the wick, those lines you are seeing represent, is telling you that okay, during the time that candle was forming, market actually got to that place. Because each of these candles you are seeing here, they have time frames. Right? Each of the candles you are seeing here have time frame. Okay, now the time frame tells you, okay, this is the period that this candle is going to use to form. For instance, if you look at underneath this chart, you will see GBP USD 1H. 1H means 1 hour. 1 hour is telling you that each of the candles you are seeing here, all right, each of the candles you are seeing here takes 1 hour to form. All right, now this is 7:56 because each of these candles is 1 hour. By 8 o'clock, a new candle will start forming. This red candle that you are seeing here is the last candle. Where my cursor is presently, that is the current candle that is forming in the market. By 8 o'clock, you will see that another candle will start forming beside it. All right. Once it is 8 o'clock, I'll call our attention to that. I just want you to know that candles have time frames. All right. Whatever time frame you are on determines the number of period that each candle will form. For instance, if I take this candle down to 5 minutes, all right, if I take this candle down to 5 minutes, now you can see it is now GBP USD 5. 5 means 5 minutes. All right, look at it, be just behind the candles. You can see GBP USD 5. 5 means 5 minutes. All right. So because it is 5 minutes, every 5 minutes there will be a new candle. So same thing as by 8 o'clock, there will be a new candle. All right. So every five minutes there will be a new candle. All right. You can take this to 4 hours. 4 hours means every four hours there will be a new candle. So every four hours there will be a new candle, and we also have the daily. All right. We have the 1 day. 1 day means each candle represents 24 hours. Each candle represents 4 hours. So every four hours there will be a new candle. Okay. So every four hours there will be a new. Every day, just one candle per day. So this red candle is telling you what has happened for the whole day. All right, till the market closes and change it over to the next day. So you must understand this, that candles have time frame. Candles have time frame. All right. Now, when you continue your education in foreign exchange market, you will understand what this time frame are used for, right? But just understand that each time frame is telling you the amount of time it took each candles to form. So, like I said, by 8 o'clock, we're gonna have a new candle here because this particular red candle that you're seeing started by 7 o'clock, gonna close by 8. A new candle will start forming from 8 o'clock to 9 o'clock, another one from 9 o'clock to 10 o'clock, right? Because we are on the 1 hour time frame. All right. I hope you guys got that. Like I said, if you don't get it, this is a recorded class. You can always go over it again. And even if it's a physical class, then we can ask questions and I go over it. But this is a constrained time class, so we must stick to time. All right, so the next thing I'm going to talk about is a major thing we look out for in technical analysis. All right, we look out for support and resistance. All right, that is the basics of everything. Because when we are talking about technical analysis, basically what we are trying to do is we are trying to, look out, give ourselves a reason why we should either buy or sell. Because now we've been able to do a training on MetaTrader 4 for you. Your MetaTrader 4 application is where you buy and sell. Now, this is tradingview.com. This is just analysis tool for your laptop. Right? I can access it on and just do my analysis. But your buying and selling, all right? Your buying and selling happens all right, and you must do your analysis to know when you are supposed to buy and sell. That is what I'm trying to do here. But the actual buying and selling happens on your MetaTrader 4 application, that particular application on your phone. That is where you buy and sell. But before you buy and sell, you must have seen a reason on the chart. Guys, look, it's already 8 o'clock. You can see a new candle is forming already. All right. You can see that a new candle is already forming already, guys. All right. So just beside the red candle that closed now, a new candle is already forming. Right? You can see market is trying to, if market is going up, it's going to be green. If it's coming down, it's going to be red. All right. So before you buy and sell, before you buy or sell in the market, all right, you must know why you are buying and selling. So you must have what we call strategy. If you remember, one of the rules I talked about on the first day of this class was you must have a strategy. All right. So one of the things you must have as a forex trader is your strategy. Why am I buying this currency pair? All right. Why am I buying this currency pair? Why am I actually going into this trade? Why am I selling this trade? So a lot of these things you will see on your chart, because the chart actually tells us what has happened in the past. All right. So in the foreign exchange market, we use what has happened in the past to judge what would happen in the present, because foreign market deals with emotions. It is actually people that are behind these currencies that are buying and selling it. So when market gets to a point, they tend to buy that currency pair. When it gets to another point, they tend to sell it. So as a trader, because you are just a daily trader, you are not the market mover, right? Whatever amount you are bringing into the market cannot move the market. Those people that actually move the market are the banks. All right, it is the banks that actually move the market. Okay, the banks move the market. So what I'm going to do is there's a question, there's a Q&A section. Right, there's a Q&A section. Just make sure you drop your questions there, and once I'm done with my training, I will answer as plenty as possible. All right, so put in your question in the Q&A section. Don't put it in the chat box. I'm not going to see it. put it in the Q&A section. So once I'm done with the class, I will be able to take some of the questions that I see there. So as I was saying, it is not your money that moves the market. It is not your buying or selling that moves the market. Those people that move the market, they're actually the banks. These guys are putting in billions of dollars, hundreds of dollars into the market. So these things move the currency. Another thing that moves the currency is the fundamental I explained. Maybe there's an increase in interest rates in the United States. It can affect the dollars. All right. Maybe Donald Trump said they're going to open their borders to a particular country. It's going to move the market. So those are the kind of things that move the market. So you as a trader, you must position yourself for that movement. Okay, Euro USD is going up. I must buy. So once I buy, I start making profit. All right. The NZD Japanese yen is coming down. Oh, I must sell it so that I can make profit. So that is what you will do. But a lot of this information, a lot of these decisions are taken on the chart. Now, one key thing that helps you take this decision, is what we call support and resistance. Guys, support and resistance. Okay. All right, support and resistance. I've talked about candles. Candles are price representation. Now, the next thing you need to understand as a basic is support and resistance. Guys, if you understand support and resistance, then any other thing you are learning in the exchange market, you're going to be understanding it perfectly. All right. Now, support. This is the definition. Before I go to the charts to show you. All right. This is the definition. Support can also be regarded as a floor. All right. Support can also be regarded as a floor, and it is an area where price finds so difficult to break downwards. I'm going to show you this on the chart. Don't worry. Just make sure you take note of what I'm saying first. Support is a floor. Now imagine you're on the floor of your house. If you bounce on the floor of your house, you're going to bounce back up. All right? It's going to bounce back up. So support is the floor, all right, where price is finding it difficult to break downward. Why you can say resistance is the ceiling. Right? Resistance is an area where price finds difficult to break upward. So we're talking about a resistance. Resistance is like is a ceiling where probably you are bouncing. If you bounce on your ceiling, you would hit your head there and it's going to pull you back down. So that is what a resistance means. Resistance can be regarded as a ceiling, while support is a floor. Now let's go to the chart and let me show you how this look. All right, let me show you how this look. Very good. Now, awesome. So let's look at this area now. I'm going to okay. Very good. So I'm going to put two lines on the screen now. I'm going to put two areas there. Okay, because support like I said, support is an area, all right, where price finds difficult to break downwards, while resistance is an area where price finds difficult to break upward. So guys, look at this very carefully, okay? This is my resistance area. Okay, while this is my support area. Okay, guys, so looking at this chart I have here, I said resistance is a roof, right? Resistance is a roof. Okay, resistance is a roof that price is finding difficult to break down. Now, look at this area right here. I'm going to show you about 4 of the 2 different instances. All right, price was unable to break. Now, look at where my arrows are pointing to. Look at where my arrows are pointing to. All right. Look at where my arrows are pointing to. All right, now we can count 1, 2, 3, 4, 5 areas. 5 areas where price got to and was unable to go past that place. Now you can see that box I drew. That's that resistance box. You can see it's serving as an area where price is finding difficult. Right? Price is finding it difficult to break that particular area. Now that area can be called a resistance area. All right, that area can be called a resistance area. Now let's look the other side. Let's look the other side. All right, you can see there's some areas there. All right, you can see, guys, you can see. Look at the red arrows that I just drew. You can see those red arrows. All right, you can see that price was getting to those support area, to the downward side, but price was unable to break it. Now that area can also be called a support area, guys. That area can be called a support area. Guys, I'm teaching you the basics of what you will need to know when you should buy or when you should sell. All right, I'm teaching you what you need to know. All right, now I've been able to explain a little bit better what is a resistance area. Resistance area can be called a ceiling where price is fine. You can see these candles. This candle got to this place, came back down, got to this place, came back down, got here, came back down again, went up again to that area. It still came back down. Price was unable to break it. It still got here, we call this consolidation. It came back down again. That is a resistance area. That is telling you that there's a resistance there. There's something that is resisting price to break that area. That is how Forex market works. Price moves in waves. Price gets to points and it reverses. Gets to a resistance area, it's going to come down. It gets to a support area, it's going to go back up. You can see that price started to come down here. Because this place is a support area, it went back up. Came down again, went back up. Came down, went back up, came all the way down again, went back all the way up. Came down again, now it's going back up, guys. Now, what do we do with this support area? What do we do with this support and resistance area? That's the next thing I want you to write down. At a support area, you would always buy at a support. Now, we've explained to you guys what buying and selling is a Forex market. The first rule of foreign exchange market is always buy at a support and never sell at a support. Guys, look at this. Look at this support area. When price got to this support area, what happened? It went back up. At this low point, I'm going to buy. Because you always want to buy low. Because that exchange rate is low. Now I can buy because that is a support. Let me link this to a traditional market. If you're a business person on this call, you would always want to make sure you are buying low and selling high, because it is when the price is low, that is where everybody wants to buy. When the price is high, what do? We sell. That same thing applies in the Forex market. When the price came down to these low points that we call our support area, then I'm supposed to buy. So at this junction, all I'm going to do is buy. All I'm going to do is buy. All right. All I'm going to do here is buy. All I'm going to do here is buy, because those areas are my support area. Guys, those areas are my support area. So I buy. All right. So the first rule is always buy at a support, never sell at a support. So imagine someone that is selling at these areas there. You can see if you sell here, price decided to go up, you are losing. If you sell here, price decided to go up, you are losing. If you decide to sell here, price decided to go up. If you sell here again, price was going up. So never sell at the support. Keep that at the back of your hand. Then at the resistance area, always sell at resistance. When you look at your charts and you find out that this area is a resistance area, guy, make sure you are selling there. Make sure what you are doing there is you are selling. I've showed you guys how to identify support areas. The next thing is, what do you do with these support areas? You sell. You buy at the support, then at your resistance, you sell. Never buy at the resistance. Never buy at the resistance. So what do I mean by that? What do I mean by that, guys? Look at it. This is my resistance. I'm supposed to sell. Supposed to sell. All right. So I'm selling here, guys. I'm selling here. Okay. Selling here again. Okay. Selling here. All right, guys. I'm selling here again. Then this is another good place to sell. All these areas are my resistance area. Quite straightforward. I've broken down this as simple as possible, right? Like for the even a kindergarten student should understand this, right? At your resistance, you're selling. At your support, you're buying. So if you wonder that, how do I? All right. If you wanted, we have wondered that, how do I know when I'm supposed to buy and sell? Right? You sell at the resistance, you buy at the support. Now that is the basics. Now the next thing I'm going to touch down on, because this is still a basic class, is at a particular point in time, guys, listen very carefully. At a particular point in time, all right, at a particular point in time, because if you look at your house structure, you have a roof, then you carried an external force. Maybe you took an hammer or something that can, break through something, and you start, putting pressure on your ceiling, putting pressure on your ceiling, putting pressure on your ceiling. What happens? It is going to break. Or you have a floor, all right? Then you carry your shovel and you start digging. You start digging. What's going to happen? The floor is going to break eventually. So even if we've called our support and resistance a floor and a ceiling, when there are forces, when there are pressure, they normally break. So at the end of the day, there's something we call break of resistance and break of support. All right. There's something we call break of resistance and break of support, guys. All right. Now let's look at this together. Now look at this. Look at this. Remember we said this box, this our red, this box is this red box, red line, the two red lines, the box inside of them is our resistance. But if you notice at a particular point in time, price sorry about that, guys. So sorry about that. So as I was saying, all right, at a particular point in time, there will be a break in resistance or a break in support because there are forces. That means the pressure of the buyers are there. Right? If there's a break of resistance, that means the buyers have pressured that resistance. Then there's a break to the upside. That is what we call a break in resistance. Guys, look at this. Look at this particular break right here. All right, you can see that price broke to the upside. Guys, you can see that price broke to the upside. This particular point here, where I circled, you can see that price, there are candles above that resistance area. That means that resistance area has been broken. All right. So at that moment, we've said we call it that the resistance has been broken. So as a forex trader, there's a reaction you wait for at that junction. I'm going to give us an intro to that. Then in our further classes, for those that join the mentorship and all, you're going to be getting more knowledge on what we do around those areas when price eventually breaks the resistance or breaks the support, right? But just know that at a particular point in time, there would always be a break in resistance and there will always be a break in support. All right. So guys, then at a particular point in time also, there's also a break in support. All right. Now look at this here right there. You can see that price broke to the downside here. All right. This particular junction. All right. You can see the break. Now that is what we call break. So price has also broken that support. Right. Price has also broken that support, guys. All right. So what happens in those areas that when there's a break? What happens? I'm just going to give us a brief of what happens. Then we round up this technical class for tonight. All right. What happens when there's a break of a support, guys? Because this was a resistance. All right. Because this is a resistance. This was actually a resistance before the break. But eventually, if price should break a resistance area, that resistance area turns to a support. All right, this is what I have here. A previous support area can turn to a new resistance area. I'm going to show you that on the chart right about now. Then a previous resistance area can turn to a new support area. All right, a previous support area can turn to a new resistance area. A previous resistance area can turn to a new support. So what do I mean by that? What do I mean by that? Guys, look at this. This was a resistance area. Price broke to the upside. Then you can see price sitting down just on that on the top of that resistance area. It has turned that area to a support area now. All right. This was previously a resistance area. Now it is a support. All right. Now it is a support. It was previously a resistance. Price did a sharp movement upward. All right. Price did a very sharp movement upward, then came down and started serving as a support, guys. Came down and started, that area is now serving as a support. That is what I mean by a previous resistance area can turn to a new support. All right, but there must be a break first. Now look at this particular support area that we have here. All right, this was a support. This was a support. All right, but eventually the moment price breaks that support, right, it's going to come back and test it as a resistance. Now that area is going to be serving as a resistance, right? I hope this is not too much for the basic people on the call, but I just have to say this, all right? Now it is serving as a resistance. When there's a break of a support, price is going to come back to test that area as a resistance, all right? So just take note of that particular part. Once you continue in your training, you will understand better. All right. A previous support area can turn to a new resistance area. A previous resistance area can turn to a new support area. All right. So let me just talk about risk management briefly, and we are good to go. All right. Now, risk management is king. All right. If technical, learning how to analyze the charts, learning how to read the charts, learning about fundamental is important. Risk management is double important. Right? I've seen a lot of people that are good technically, but because they lack risk management, they keep losing. All right. And I've seen a lot of people that they are just half-baked because of their good technical, because of their good risk management, they keep winning. They keep winning. They keep winning. Risk management. What does risk management mean? Risk management means you are able to, not over leverage your account. You're able to, stay in the right proportion of the amount of money you're exposing to the market at a particular point in time. all right, because we deal with lot sizes. We deal with, it is lot sizes that converts our profits to dollars. So normally in the foreign exchange market, when you buy and the exchange rate is increasing, you are making some profits. All right, you are making some pips. You bought at 100, exchange rate start going to 110, 115, 120, 121, 122. You start making some profits. What converts that profit to dollars is your lot size. Now you must use and when if you are buying also, price is at 100, then price starts going down to 99, 98, 80, 89, 88, 87. All right, that loss you are accumulating is also translated to dollars by your lot size. So your lot size is a double-edged sword. I want you to understand this. Your lot size is a double-edged sword. Fine if you can use a lot size that gives you a lot of money positively, but at the same time, if that trade is going negatively, you would also be losing some money. So you want to make sure, guys, listen very carefully. You want to make sure you are using a lot size that is not going to harm you if the market is going other, because the market will go otherwise. Forex market is not 100%. Like I told you, you are not the one making the decision in the market. You are not the one making the decision in the market. All right? So there are some days that even if your analysis is great, there are still some days that the market is going to go against you. So you must stay in the confine of risk management. Risk management is your wife in the foreign exchange market. You must always look out for it. So we have three kind of lot sizes like they've taught you guys. We have the micro. Micro is 0.01. All right. Micro is 0.01 up to 0.09. And you're practically making $0.1 per pip. If you are using 0.01, if you are using 0.05, you are making $0.5 per pip. If you are losing, you're also losing that same amount. Meaning is 0.1 to 0.9, and you're making $1 up to $9 per pip when you're using meaning. And we have the standard, which is 1 up to infinity. All right. So if you're using one lot size, you're making $10 per pip. If you're using 5 lot size, you are making $50 per pip. Guys, but your account size determines the lot size you will use. So if you have $100 in your account, if you have $100 in your account, your lot size must not be more than 0.01. Basic of risk management. All right. If you have $200 in your account, your lot size should not be more than 0.02. As a beginner, once you now understand more on risk management, on your analysis, good. You can put a little bit of more exposure. But as a beginner, you have $500, your lot size should not be more than 0.05. If you have $1,000, then you can use 0.1. If you have $10,000, you can use 1 lot size. Guys, that is the basics. I hope you've taken it out. For every $100 you have in your lot size, your lot, for every $100 you have in your account, your lot size should be 0.01. All right, and you shouldn't risk more than 3%. But if you keep to these lot sizes, you won't be risking more than 3% of your capital per time, because that is the rule in the foreign exchange market. Do not risk more than 3% of your account size. All right, do not risk more than 3% of your account size. So let me see what I have in the Q&A. Someone said, what sites can I register or app? I really don't get. Is this your first day of joining the training? Do we buy and sell on the same platform we analyze, support, and instance areas? Like I told you, this particular platform I showed, this trading view is just an analysis platform. All your trading is done on your MetaTrader 4. All right, your MT4 is where you buy and sell. I can only do analysis on TradingView. Can this chart analysis work for binary trading? Yes, sir. Mr. Daly, yes, it works for whether binary or normal Forex. It works for any one of them. All right. So, guys, basically that's about the little about technical analysis, risk management, fundamentals. All right. Like I used to tell people, Forex market takes time to fully understand. I've been in the game for 4 years. I keep learning every day. I keep training almost every day, and that keeps me in the game, keeps me going every day. All right. So instead of global traders, what we basically do is training. And we don't do investments. We don't collect money to trade for people. Majorly, we trade and we mentor. All right. Now we are giving a chance for you to actually join our mentorship group. And signal group as a beginner, because you still need more education. But as a beginner, you have the opportunity to join our signal group where you can pick up trades, analyze trade for you, done for you, analyze trade for you, and you can apply it on your MetaTrader to make some money, even while you are still learning. All right, while you are getting your education from wherever you want to get it. All right, but you have this opportunity to, make some money, see how the foreign exchange market works, put in some money in the market and trade. All right, so what do you need to do? You need to have a verified Forex account open through one of our links sent to you. All right, then you must fund it up with a minimum of $100 only. Right? So if you fund it up with a minimum of $100, you can contact any of the admins on the group, whether me, Kofo, Fumi, whoever invited you on the call, and we can put you on our signal group and mentorship group. So on the mentorship group, you have access to further trainings that we do for our in-house members, for our team members. All right. So you have further trainings to that. You can ask questions. You can talk to any of the mentors that we have in the group. They can answer your question, and on top of that, you have access to the signal group where you can, this is what you need to buy today, this is what you need to sell today, and thanks to God, the winning rate has been good. All right, the winning rate has been, you can make some money for yourself, and you can, advance from that. You to get to learn, get to know more about the foreign exchange market, educate yourself more, and you can eventually start analyzing the charts yourself. All right. So what do you need to do? Like I said, open a Forex account. Make sure it is verified, because if it's not verified, you can't trade, you can't fund. All right. To one of the links we provided. Make sure you set up your Forex account and fund it up with a minimum of $100. Once you have done that, then you can contact any of the admins so that we can put you on a Telegram signal group and mentorship group. All right. Now, so what do you need to do next now? You can send me a message on WhatsApp, or so I'm going to drop my WhatsApp number here. All right, I'm going to drop my WhatsApp number here now, or on Instagram. All right, if you want a quick reply, please message me on WhatsApp. All right, message me on WhatsApp. That's, I'm going to be some messages on Instagram drops to my request message, and I see it late. Okay, so that's my Instagram link page. So guys, send me a message on WhatsApp. If you've not confirmed the Forex account, send me a message. Let me see the issue you're having with it, so that I can help you get it verified as soon as possible. All right, then if you've not opened yours, make sure you open it. Then follow it up with a minimum of $100. Guys, give you access to mentorship and the signal groups that we provide for now, and you have access to further trainings with us also. All right, so make sure you do that. Send me a message on WhatsApp, or you add me up on Instagram, send me a message, and let us take this to the next level. I hope you guys have gained some value. So I'm going to drop the recordings of this call tonight for the one we did in the last 2 days also. I'm going to put it on YouTube and drop it so that we can go over it over and over again. All right, you can go over. There are some previous things we've done on the YouTube channel also. You can go through it and you can learn a lot from it. But for you to start trading, do the needful, get your Forex account, fund it up, and we take it up from there. All right. Please, if you've gained some value on the call tonight, just put in some 222 in the chat box. Let me see your 222 in the chat box. If you've gained some value tonight from what I've explained, from what I've taught, put in some 222 in the chat box. I really appreciate every one of you. All right, I appreciate every one of you for joining the call tonight. We do this back to back. You can invite your friends and family to also learn, to also, get to make some money in the foreign exchange. But make sure you get in contact with us. Let us see how we can help you get started in this industry. I really appreciate everybody. My name remains Awal Adeogun, and I'm super excited to have you all on the team. Super excited to see you all start trading, start learning, and doing this big time and making some good money for yourself. I appreciate you guys. Good night.